quite a few people joining. For those who are joining, apologies that we're quite a few minutes late. I'll keep apologizing as many people keep joining. Apologies. We've had some technical issues on our side. As you can never always be reliant on technology, clearly, which is quite an important point about today's conversation, honestly, and it actually relates quite well. Yeah, I'd like to apologize first of all, definitely to everybody who's joining. I know we're 7 minutes late in starting, so extremely sorry about that. For those who know me, know that I'm never tardy like this. So thank you for your patience. Appreciate you joining again. And yes, we will commence the webinar now. So thank you for joining our live session. With live sessions, you always have some technical difficulties, as you've now very much understood that we've had. I'm Nicholas Everard, the Regional Director for MIA and India here at G2. For those who don't know, G2, as well as others, G2 is the leader in providing merchant lifecycle solutions for acquirers, PSPs, PayFacs, ISOs, and also merchants of record. As you can see from the webinar title, we're here today to talk about false positives, and more specifically from a merchant of record point of view. Now, we estimate this session will take around 45 minutes, so it's a good job that we've put it in for an hour considering the late start. But before we start the discussion, and I introduce you to our esteemed guests today, I have a couple of housekeeping points that I do have to review with you. So in terms of a brief disclaimer, first of all, and a liability waiver from our legal team, of course. From who else would it be? As you might expect, the information presentation is general information. If needed, please seek out independent professional advice relevant to your own particular circumstances. And finally, G2 is not liable or responsible for any injury. So, of course, keep seated. Loss or damage or any nature experienced by using the information in this presentation. With regards to the session today, please submit any of your questions that you may have via the GoToWebinar question panel. So you can ask live questions and we will answer them at the end of this session. And if you do want to reach out to myself directly or marketing directly, their email address is there and mine will be available at the end, of course. And there are actually some handouts available in the handout tab. There's 3 downloads. There's the deck from today. There's also our PMM, so our persistent merchant monitoring, PDF template and deck, which actually explains what persistent merchant monitoring is, and also our transaction laundering solution. So finally, I'd like to mention that the recording itself is also fully recorded, of course, and will be sent to you all at the end of this session in the next coming days. With that, and again, apologies for the delay, let's move on to the introductions. Today's session is actually a true story of Phil, who's live with me right now, and his grueling journey within finding the best possible merchant monitoring solution. And I think this is actually a story that many of you will be able to relate to, whether that be historically or even today. So Phil, do you mind introducing yourself and telling everybody who you are?
Yeah, definitely. So I originally came from a sales and account management background, took a real interest in compliance and risk, often in conversations with my brother who works in the same industry, gradually got more and more drawn into it and took the opportunity to move into first an AML analyst role at Payvision, whereas an excellent opportunity to learn about all kinds of different kind of risks. So they had some very high risk kind of categories in their portfolio, but they obviously had quite a balanced book in terms of they supported pretty much whatever they could. So it's good to get a good footing in that area. Moved on from there to working at PaySafe, obviously another well-known player in the market, and it's very different environment. The size difference between the two and the types of customers that you might see. There are obviously new verticals and a big exposure to the travel space as well, where there's a totally different set of problems to look at. Probably worth another call another time for Nick, maybe something. Whilst working there, I got some contact that came through from someone that I worked with at Payvision, and he had an opportunity to come in and help him establish a compliance framework over at Paddle, and really help them to build from scratch a team that they'd only really recently kind of realised there was a need for, due to external kind of factors. And I think it was one of those things where the expectations from partners as well had started to change. So they relied on some partner relationships, and it was really important to start to put the right policies in place, the right controls, and establish what was needed there. And more recently, took a similar role at Neum, so took an opportunity to help them try to build a team right from scratch, as in day one, getting started, building everything, and at the same time trying to look into some markets they hadn't really worked with previously, and look at the right tooling. So quite a lot of experience on that side with the vendor relationships, where you're trying to help build those controls. And then obviously that brings me to where we are today.
Brilliant. Thank you for that. Thank you for that introduction. And today I'd like to, as we've discussed, focus primarily on Paddle. And I think it's important for people to maybe understand from your perspective, because considering you work there, what is Paddle? What was their offering? Because it's very different from maybe some of our attendees on the call today who might work for acquirers, PSPs, PayFacs, even potentially even marketplaces. Could you explain for us, what was Paddle's core and what did they represent?
Yeah, it's a really interesting kind of conversation to have here, because Paddle worked in the software as a service space, which really focused on tools that might include things that might just make emails work better. It could literally be as simple as that, but it could be expansive as, obviously Apple and Google and, Microsoft products, fall into the same category in ebooks. So it's a huge market, and it has some differing requirements to what you might see in typical acquiring. So you've really got a lot of focus on that subscription side. And I think the other side of that to consider is that widespread means you're getting exposed to an awful lot of potential risks in there. So these SaaS kind of options that might be there for people might dip into potentially all kinds of markets. So even high risk markets like gambling, for example, there might be tools for analysing that side, on that, in those kind of terms. But then on the other side, there might be things that were as benign as kind of sound mixers and, like I said, ebooks and things like that. So it had a huge number of potential industries that it touched into, and all of them have to kind of be considered in that. So whilst it seems like quite a small niche of the market, it really is quite broad when you kind of consider the implications.
Yeah, and then when you joined, of course, as a merchant of record, they traditionally have an acquirer that supports them to be able to process payments. Now, when you joined that team at Paddle, could you walk us through your first couple of days and what happened? Because I have a very brief recollection of that being quite a stressful time, let's put it.
Yeah, it really was. And I had conversations with the team before I was coming in, so I had a good idea, and we were starting to talk about plans about how we might address things. And then, as ever happens, these plans are well founded and well placed, but problems started to come up, and it was really that kind of compliance shock that a lot of growing institutions kind of have as they're working in that payment space. So be it whether they're working on the regulated side or they're working as a merchant of records where you're taking on the goods in your own name, you're still exposed to these kind of risks. And I think the expectancy from partners increases, and it increases very quickly. And I think that Paddle, like a lot of firms, had found that it had come a bit quicker than they might have expected. And this led to some pressures in the relationship. So one of the partners had actually picked up on something that had not been to their liking, and they had some real concerns about what that would mean from a control perspective. And given the size of the team, which was still only 3 people, and the fact that the policies and controls hadn't been well defined and built out, so even though there were some there, it was very difficult to explain that to them. That led to some real difficulties, and it led to the ending of that relationship between the 2 parties, which put immense pressure upon the remaining relationships. And I'm sure this is the pain a lot of growing entities in this space go through. But it really did make it a very interesting start to life there.
Because I think what's interesting for people on the call to understand is that merchants of record are not necessarily bound by the same rules and regulations as acquirers are. It's very much from the acquirer's standpoint to impose, we shall say, those types of rules and regulations upon the merchant of record. So touching on what you just said then, so when that relationship ended, was that around, let's say, the different products that were being sold on that on those particular websites, let's say, that were associated to Paddle, and what infrastructure had to be put in place to ensure that this wasn't going to happen again?
I mean, the way you put it is perfect, really, because I think this is part of the problem that you encounter is that it's almost like a lack of awareness of the responsibilities that might come with it. And when I talked about like the risks that certain products might present, this is something where initially in that relationship there'd been more of a reliance on potentially the partners who would potentially have helped around the onboarding and may have helped in terms of what controls would be in place and kind of given almost how they would like things to be onboarded. And gradually, as you grow, you're expected to have your own policies, procedures, controls in place. And this was very much where the problem started from. As the volumes started to do their upward curve, you had some problems that were being spotted. So the particular one that was a problem in the relationship that was exited just when I started was actually around Microsoft tech scams. So it wasn't necessarily easy to pick up. But the main concern they had wasn't necessarily whether this was picked up or not. It was just making sure that there was the right methodology and that we had the right kind of tooling to be able to go out there, find these risks and be able to protect ourselves from that.
And talking about tools now, because obviously you had to make a very quick decision to be able to get something in place. If you're growing tremendously, and we're not just talking about a couple of hundred new merchants coming on board here and there, we're talking about thousands of merchants coming on board very quickly and not sporadically, in the sense that they're very far apart. It's very much they're coming non-stop. So how do you do that then? How did you manage to fix that issue?
Yeah, absolutely. It was under a time constrained kind of pressures, and sometimes this happens. Like, let's face it, this is a situation that comes up with fintechs quite a lot, and I think there are a lot of factors that will help you decide tools, and often you'd love to have like a 6-month process where you kind of go through and test everything and look at it, but really you're talking about what could have been like an existential threat, to their business. Another loss of partner might put them under more pressure with the kind of remaining partners. So it's really important to kind of go out there. And when that happens, you might potentially tap into a relationship you already have. So there was already some tooling that was being brought in, and it was basically just a case of kind of rushing through this. So not really a process where we had a chance to go out and do the full due diligence and look at what our requirements were. This was a knee-jerk need to get something in place quite quickly. And, that's where we had to go with that side.
And in terms of, we don't have to name names, of course, but I know, and you know as well as I do, that your initial choice was not G2. Now, that can be from the different stakeholders within the business, as you said, a bit of a, let's say, knee-jerk reaction from losing a partner, making sure that this doesn't keep happening. It can be detrimental for the business, and then can put the business in an area where it realistically can't come back from. So could you speak to us a bit more about, when that new solution was put in place, because beforehand there wasn't one, what were the findings? Did it appease the partners initially, and how did that then come to, you and I ended up working together?
Initially, it worked because, it brought some results and it was helpful. And also, this is, with caution I say this, it's almost like a band-aid kind of thing, like just taking action, whether or not it was the perfect tool or not, was like something that needed to be seen from the perspective of the partners. But the problems that started to arise were the kind of second problem that comes with a lot of fintechs, which is that you have this thing where it kind of seems like you've hit this like really high level of growth, and you get caught off guards kind of again, because it kind of does this rapid upward curve. And that's what started to happen whilst we were working with this other entity, and whilst we were working with the tool. it had been fit for purpose in the early days, but gradually those requirements changed, and we started to find that we were being flooded with more and more alerts. So they had been quite accurate and good in the earlier days, but the approach for our sign up also changed. We brought in a self-serve onboarding system, which isn't to say that there was no one looking at the cases, but it meant that we were starting to go out and look for the results before someone had actually picked up the case. So there'd been a filtering process that had taken place before that. So alerts, when I first started, there were at times maybe 100 or 200 to clear, and that might be on a weekly or 2 weekly basis, which still took some work to do. And there was quite a high proportion of false positives. Some of them are more just flags, so you're kind of aware this is a high risk industry. Take corrective kind of due diligence and make sure that you're comfortable with the risk. Others were more of a case of, this was something that we really need to pick up on sooner. And once we switched the self-serve onboarding system on, we went from 300 attempted sign-ups on a monthly basis up to 3,000. That happened in the first month. Yeah, that was the face I kind of pulled, because when we asked for predictions on what the team thought, we were told maybe 700 or 800, would be a dreamy kind of state. So I think everyone was kind of surprised, and there'd been it had been really well packaged by the marketing team, and I think there was like a pent up kind of wanted to get in and sign up. Now that sudden rush obviously generated a huge number of alerts. So that was obviously for everything that we were kind of onboarding, and we initially were able to cope, but very quickly it became overwhelming. And this is where the tooling is something that you have to kind of consistently review in the future, and you've got to really think about your requirements, because it became very clear. Once we got up to 3,000 alerts that still needed to be worked at one point. And that's an immense amount of work, because regardless of what they're for, you still want to try to look through each of the alerts. They're there for a reason. And it became too much for the team to manage, which was where we realised in pretty quick order that we were going to need to go back out and look at some solutions. Now, it didn't necessarily mean we wouldn't be able to work with the partner we were, but it meant we had to have a conversation with them about making it work better for us, whilst also going out and looking at alternatives.
And then I think it'll be interesting for the other people on the line also to understand, what was the size of the team that you were dealing with? Because that can vary. People might not necessarily know the size of Paddle. I speak to acquiring banks in France, in Bulgaria, in the UK, and they do differ. But on average, from my perspective, and it's usually 3 to 5 people maximum in a team that's dealing with the ongoing monitoring and the transaction laundering side. Now, from a merchant of records point of view, again, that's why I'm saying maybe some people won't understand the sizing here, but I think it's important to point out.
Yeah, it really is. It's like that resource pull as well, because the activities that the team were taking on had started to change. So you get your specialisation that comes in. So we went from a team that at one point was 4 when I started, that dropped to 3. And, one thing I hadn't mentioned was that there was actually the person who previously been leading the team had actually left in that first week under the pressures that had kind of come up here. So it had been a really difficult time for the team. And then 2 of the analysts who were also working in the team kind of moved on. So we actually grew from 1 and gradually got up to a 5. And by the time we hit the self-serve onboarding, we were up to 8. But within months after this, to give you an idea of like the way the volumes just continued to come for applications, we'd moved up to the nearly 20 kind of mark on the team. It's just how quickly we had to grow to respond to this. And that's not, there's a variety of reasons. So some of it is just pure getting through your onboarding cases, but there's other aspects. So you need to start to think about potentially like an ops side of the team. So making the tools more effective, in terms of what we're using, but also maybe having individuals who are really just focused on policies day to day, which is something that I started to kind of gradually concentrate into as well. And this was where we started to have the problem, was when we had the team of 8 or 9, potentially we could have people working these alerts, the 3,000 alerts that were there, but suddenly it might be that only one person could kind of find time and resource to look at the alerts, because there were other things to kind of consider from that risk perspective, which includes like your transaction monitoring, and other risks that kind of come up, and reviewing new potential issues that are being found that need to have a review, including the situation with Ukraine and Russia, which led to like a lot of pull of resource there. So it's really important for us to kind of think about what we needed from the tool to start to pull all of that together, and to go out there and start to look at what options we had, and potentially involving the other two departments within the business. So trying to talk about others who had needs, because one of the big problems that we'd had at Paddle actually been on onboarding times. So when I first started, they'd been as high as 6 months sometimes for some entities. And obviously, I don't think anyone in the school is thinking that's a good onboarding time. It's not a great position.
Yeah, no.
And that needed to come to days. And this is where it's so important to have the kind of right tooling, because when we got these alerts, people were starting to slow down with the onboarding because people were shifting between priorities. And that's where it really started to break. So hence why we get on to today's conversation.
Yes, and that's where we really come on to the conversation, and this is really touching on the topic of today, which is, getting stuck in the mud with false positives. And I think it's something that everybody's experienced. For those who haven't, I hope you never have to experience having to deal with 3,000 alerts every other week or so, which then grows to, of course, around 10,000 a month, and trying to weed out what those false positives look like at the same time, as Phil has said, trying to do everything else alongside, the compliance, the due diligence, the risks, the new rules and regulations which might be coming out from the schemes. You've got to try and stay on top of everything, and then do additional work for us on a solution that you're already paying for, and then probably even hire more staff to be able to maintain something that should realistically be maintaining itself with little to no interaction from yourself. So it's quite frustrating. I can hear that, and I would say sorry for the stress you would have gone through at that time, and it'd be great, I think, to then touch on what happened then. I think you touched on it briefly, where you said you then went out to the market, you then started looking at what else is out there, alongside also talking to the other vendor at the same time to try and see whether those parameters could be changed to its best ability, let's say. And then we touched base together, and we met, of course. Do you mind going into a bit more depth about the experience and what you found and the differences, I think, after that too? Because I think it's important to outline from your perspective, of course, what those differentiators were.
Yeah, definitely. And I think something that's really important to kind of add in here as well is that, once you're dealing with that kind of level of alerts, and I'm sure people have been in a position where you're swamped with alert, for whatever reason it's happens, you're really worried about things slipping the net, and when I say slipping the net, this could potentially be like financial loss, or this could be something where you just want to kind of get to it quicker. And those problems in themselves can kind of grow, because things that you might pick up on an alert, so it might find like a potential transaction order or something like that. This was a capability we didn't even have previously, and it hadn't really worked well for us, because that was quite a big bulk of the alerts, so about 2,000 or so. So that's one of your most serious potential alerts, yet there were a lot of false positives in there. And what we were able to do is, if we could find an alert quite quickly and we could pick up a potential risk for transaction laundering, we would immediately be able to create rules potentially on the transaction monitoring side, or be able to utilize other searches. So it's kind of like a thing where it all starts to pressure into other areas. And I think that's important, because it also gave us some other requirements that we needed potentially to have an ability, a bit of customization, in order to make sure that we got like the right alerts, like as the right levels of priority. So to make it very clear, like, is there something that looks like a very serious risk of transaction laundering, and on what basis is that, being found? Because, in a time where you have quite tight situation on the resources, you need to know where to put it. Like, certain alerts can have different SLAs, and that's really important to factor in. So we actually got into conversation, as I said, with the existing provider, and we talked about any changes. And one of the things we found that was a real snag was it was going to be very difficult to make any customizations to the tool. So we could potentially change the alerts in terms of content risks, which is obviously like another side of it. But outside of that, we weren't able to make any big changes to the product. So it meant that we were not really getting things in the order and the manner that we wanted them. So this is like another big factor. And I think a further kind of conversation was we had a really good relationship with the account manager at the previous provider. But a lot of what we were trying to put together and a lot of the ideas that that account manager brought, we weren't able to kind of bring them into fruition. It's a really frustrating position because these were things that weren't potentially unique to paddle. Because obviously, a lot of these tools, you're going to have times where it's going to be difficult to make a change because it's quite a substantial change, and understandably, they're costing, you can kind of consider. And when we took the opportunity to reach out, one of the factors we'd actually kind of considered was how responsive the provider would be, literally in the sales process, because we kind of thought if in the sales process you're not able to kind of run through your questions and you're not able to communicate and fully understand the products, this was actually going to be a problem for us, because we wanted to know that there was that support there and that we had people who were, they're not going to be able to give you absolutely everything you might want out of the tool, but maybe they can kind of help you to be able to make it work in a way that will help to kind of resolve or mitigate that risk. And that's why, so we went through a few meetings and met with some of the other providers. And as soon as we met with Nick and Zan on this side, it was really quite reassuring. We already knew it was a good tool, so I'd actually already worked with it previously at Payvision. And actually, the main feature we wanted there was the bespoke investigation side. So being able to kind of drop in a domain and say, there you go, and let them go and pull together all the results that they can, which is a really amazing thing to kind of have when you're struggling for resources and you can kind of dip into someone else who can then support you. But we went through, we talked about the false positives, we talked about the inability to kind of prioritize, and we even also wanted to kind of add in, and this was actually something where we didn't know if there was going to be a capability here. This was a more of a hope than an expectation, to be able to bring in potentially some custom words that worked for us. So we had some potential extra risks. So we worked with Alipay and certain other providers who, or payment methods where basically there'd be a need to potentially pick up on products which wouldn't necessarily be high risk in other markets, or wouldn't be seen as a high risk product, but obviously would be a problem there. So we needed alerts that could be generated from that. So yeah, we got into a meeting and we were talking through the false positives. Obviously, with all the providers, they'll give you a talk about, we'll do X, Y, and Z. So you'll get that speed. Even with your existing provider, you'll kind of get that side. The thing that really impressed us with G2 was the way working with Nick and Dan was, they were very clear about what the tool could do and, what kind of results you could expect. And the results we were getting were matching to what we've been promised. So I think that's a really important thing, because that's like a trust building thing, but it's also allowing you to then kind of factor in what kind of resources you need to put into it, and what other considerations, what do I need to do, which is outside of tool, potentially to take on things that may not be possible. But as it happens, a lot of what we wanted was there, and it was a fantastic conversation. It was really reassuring kind of with the stress we were under. And being very honest, the setup internally was that there was another tool in the market that people were very keen on. And I think basically it needed to really be beaten, and that's truly what happens. We were so impressed with that call, and there were people who I was actually quite surprised in the call just came straight off it, ready to go. And it was a fantastic relationship. It really started from there.
And I think it's grown into a very good friendship too, I must say. Even if you are no longer with Paddle now, it's still a very good friendship too, and same with your brother at this point. But I think it's also important to point out something, and it just came to mind, is that even though you had high false positives on the persistent merchant monitoring side, so the monitoring of the actual products present on the websites, the hits that you were receiving from a transaction laundering perspective weren't realistically there. So I think that's again important to point out that Phil wasn't actually receiving false positives across the board. In some areas he wasn't receiving any results, and on one side he was getting too many results. So when I recall when we did the proof of concept, I think we did it on about 10 or 50% of the portfolio, which was quite a couple of thousand. And we came back, I think, with 20 or 30 hits in total on that couple of thousand, which you and the team were quite astonished by. And then we did the same on the transaction laundering piece. And again, we found more results in just that little area than you did over a certain amount of time with that existing provider. So I think that too is quite important to point out, that we were able to deliver beyond expectation, I would say.
Yeah. This is a really good time to be able to jump on the back of that. And we intentionally cheated to some extent. So we actually did the thing that most people will do and put some results we knew should come through. We wanted to sort of see what the tool was capable of, particularly on that transaction laundering side, because we'd had the situation, again, it's just a typical kind of step that you get with the fintechs, that as awareness of the product grows, unfortunately, you get more bad actors potentially aware of and interested in potentially trying to abuse your product. And this was something that we were having to really concentrate on and put a lot of resources into. There were individual members of the team working on specific individual kind of bad actors that were using like multiple domains, and we put a few of those in there, and actually these were coming up, but so were other things that we'd missed in the portfolio. And actually this was a really good opportunity to be able to kind of talk about what using how did G2 find this, and then being able to kind of redeploy this as tools that we could then use on the onboarding side. So we're going to block potentially certain things like IP address. Was there something? How did you guys come to that? So it's really useful because it kind of allowed us to actually work in areas that we hadn't necessarily originally set out to do so.
Very good. Yeah, no, and I think again you just touched on another point, and I know we could have another whole conversation around this, but just so that the audience knows, we didn't only support Phil and his team with persistent merchant monitoring and the monitoring of the actual websites and also transaction laundering, but we did the full core solution overview, which was also part of the onboarding, because realistically where we can start. It's at stage of onboarding. What is going on, not only from a today's perspective, but also from a historical perspective. And that's another thing I think Paddle really saw in G2, which was our ability to harness the data. And that's what we are. We're a data-driven business that looks at being able to inform each and every one of you from an onboarding perspective, what is going on, what are the risks, and how can we help you prevent those risks moving on and moving forward? Because there's no point in onboarding somebody and then ending up like Phil's described, having 3,000 potential false alerts, potential real alerts, when they could have been dealt with from day one. So yeah, no, I appreciate that, Phil. I think it's been really interesting today. I wanted to just ask you one more question around, once we did the proof of concept, just so that others that might not be utilizing the G2 tool as of yet, once we'd done the proof of concept, how did you find the tool? Did you find it more straightforward? Was it likable? The do's and don'ts. You can be honest here. I know that you did say there's a couple of more colors and stuff with the other provider, and it might have been a little bit more colorful, let's as one of the feedbacks I recall.
No, it's a really good point. And it's actually fun enough. One of the things I wasn't sure on was like the UI side, like when Nick's joking about like the colors and how it looks and stuff, and not for people who've worked in the industry, because I think it's like a perfectly easy tool to use. But obviously, I then need to, and the team I'm working with, and the people who are going to kind of approve this need to understand it and sort of see how it works, and they need to be happy. And actually, the strange thing we had was, as we were running through kind of a second meeting, as we're running through the tool, and I thought this is where this is going to come up. The first feedback point that came out the back of it was they love the UI, and actually that was something where I thought there'd be like a bit of a conversation to take place, and it's like maybe it's just one of those things where we talk too much, like we're almost like sabotaging our own kind of thought process, worried that others might kind of find problems here. But I think the relationship thing, like I can't say enough how important it is to have access to someone that's there to kind of have these very honest conversations, and honesty is so important, not promising things that can't kind of be delivered, but really pragmatic as well. So I don't want to say like it was just conversations of we can't do. There was every opportunity and every thought given to how potentially the new requirements that we were coming up with on a regular basis could potentially be met. And some of these this might be something that's coming at this point, but they were very honestly answered. And I found that invaluable, because you need to kind of know what the capabilities are, where's it going, is there anything that could be changed. And like I said, we use this customization side with the keywords, and that was really important to us to have that feature.
Yeah, no, that's really good. And final question, I think you've named so many benefits on this topic. Final question would be, besides everything you've mentioned so far, were there any other benefits that you didn't envisage seeing that you ended up getting?
Yeah, 100%. And well, actually, kind of coming back because I realised I didn't actually get into the number side I'd meant to on there. As I said, we were sitting on what had gone from like 3,000 alerts. We were getting up to the into the 5-figure kind of stage of like likely to be false positives, but you can never know that. And when we first ran the entire portfolio through, we were expecting like a few hundred hits, and we thought that was like realistic and something we could kind of manage. And the first one came back. I can't quite remember the exact number. I think Nick's better at this. I think it was like 38 or 39, and they were all like hits. So it was all actually what we kind of expected. And on the transaction laundering side, we'd actually already taken a few and offboarded them from the testing phase. So that had worked quite well. And that was just coming through at like a 1 and 2 a month, but enough that, it would have been more if it wasn't for the fact that they were being found so quickly and we were basically getting rid of them through other means. So really amazed with that side.
And it helps you secure your partnerships for a longer time. Certainly, the acquirers can put a lot of pressure on merchants of records, as we stated at the beginning. Anything else you wanted to add there, Phil? Sorry.
Yeah, just coming back to the bespoke investigation side, and that was again a really useful tool, and that's kind of twofold because you've obviously got the ability to do it within the tool as such, so you can kind of go in and actually just drop these domains in there and potentially add in your reasons for why you thought there were concerns. But this is something that you can still talk to Nick about or whoever you're working with. So this is the really nice thing, is it's not all just go and do this in the app, like speak to me, talk about it. Like, so not everything's going to perfectly fit into just dropping a domain in there and putting a reason. Like sometimes you want to talk it through, explain it a little bit, maybe even take some kind of input. Because there were times we had conversations and actually, Nick's talking about things that maybe we weren't even fully aware we might potentially need to sort of look for. This is some of the nice things, and it's the beauty of when your relationship works really well, there are things that are going to be flagging, and you've got your sales contacts and account manager coming back to you and saying, we're finding these in the portfolio, are you aware of this, and notifying us of potential rule changes that are coming up. So it was really good to kind of work in that manner.
Thank you. I appreciate the compliment. I really do, and I know the team does too, and it's been a very beautiful relationship, I would say, from the beginning, and I hope to carry it on even without you there at the moment now, of course. I had one last question for the group, and I think it's always interesting to ask. It's having worked for so many different styles now of individuals within the payment space now, and having seen so many different risks, from your perspective, where do you see the biggest risk coming for the payment space, and in our space that we're in at this moment in time?
Maybe this is just from the kind of experiences I had, but truly that transaction laundering kind of side just it's always been a problem, but it's becoming quite clever, so people can work out your other capabilities. So you can have excellent controls, which could include things like the domain blocking I talked about, and potentially being able to use like other things like the address of the email, like what countries are the signups coming from. These are things that you can kind of build, but we found that people were just getting like smarter and smarter in these signups. So it became harder and harder to kind of detect these things. And there are other big risks in the industry, but I think this is one of the scariest risks because it's so quick to kind of evolve. And this was the thing I really loved about the transaction laundering detection side, was this was going to become a problem that was potentially going to be another issue. The next kind of difficult situation we've got, because often you've got the partners who are monitoring with similar tools in the background, or potentially they've got other rules and they're able to see it. And some of these things later through things like chargebacks are going to have information in there that are going to show that it's transaction laundering. And obviously for the purpose of like maintaining that relationship which we've just rebuilt, it's so important to lend that confidence. And it's the thing I've often talked to Nick about, and it sounds horrible, but it's almost like this insurance policy, and the credibility and like reliability of the tool is so important. Like being able to kind of go back to the partner that you're working with in the background and be able to say, look, to say Stripe and Checkout and say, we are using this tool, talk about how it works and how you've got it set up, and this is like lending credibility. So things are never going to go perfect. There are, you know, because of the intelligence of the bad actors and the people who are trying to kind of abuse the systems you set up. But by having that right kind of tooling, you're in a position where you can much more easily kind of discuss it and be more solution orientated with them, like maybe even take some input and have open conversations with them about, you know, the kind of reasons that these things slip through. Whereas it's always scary to kind of think back to the previous kind of times where the first issues came up, where, you know, there was no defense, there was nothing in place, because it wasn't necessarily a known kind of need and risk, you know, which was obviously a very difficult time to try and quickly catch up for Paddle, where they did a resilient and a great job of getting to speed very quickly.
Yeah, and I think that is something, and this is my last comment back, is that I think that's something that a lot of us in the payment space always forget, is that high risk, I would say, is high risk for a reason, of course, because of the industry that it's in, but the amount of red tape that's surrounded by it usually means that transaction laundering is not going to be highly present. It's always the low risk merchants that are, to me, more high risk than the high risk players out there. So it's something to always be mindful of, and the due diligence that needs to take place behind. But with that, I think that covers our session realistically for today, Phil. And I do really appreciate you having joined today, and I hope that everybody on the line finds it as insightful as I have done today, of course. And of course, as I already mentioned, if you do have any other questions that you want to ask either Phil or myself or our marketing team, you're welcome to reach out to us. We will also be including Phil's email address, his personal one, so that you can reach out to him if and when need be, if you do want to follow up with him on his thoughts or any feedback. I know Phil's as keen as me on sharing his experience within this space. But yes, that concludes our session for today. And again, special thank you to Phil, of course, and for sharing your experience. And thank you all for attending, and wishing you all a wonderful rest of your day. Thank you, Phil.
Thanks, Nick. Really enjoyed that.
Thank you. Take care all.